When you think about the most innovative business strategies out there, I'm guessing self-storage isn't the first thing that pops into your head. But what if I told you one of the smartest business plays in real estate is happening right there, between those roll-up doors? Today, we're diving into how one company basically copied the McDonald's playbook to take on an industry giant, and it all boils down to one super powerful idea.
This quote right here, this is the key to the whole thing. It perfectly sets up this fundamental battle in business strategy. Is it actually better to own all the stuff, the physical assets, or is it better to control the system that makes it all run? One company built an empire of property, and the other, well, they built an empire of process. We're about to find out which one really has the edge.
So, let's meet our two contenders. In one corner, you've got Public Storage. They're the OG, the traditional giant, the incumbent that built its massive empire the old-fashioned way, by buying and owning every single property. And in the other corner, you have Extra Space Storage, the challenger, the innovator that showed up with a completely different game plan. Okay, so to really get why their strategies are so different, we first have to understand the industry they're playing in. For a long time, self-storage was kind of a sleepy, fragmented market. And that, it turns out, was the perfect opening for a whole new way of thinking.
Just take a look at this breakdown of the US market. It's kind of wild. A massive 70%, 70, of all storage facilities are owned by small, independent operators. We're talking mom and pop shops, not huge corporations. And they often just don't have the money or the scale for things like sophisticated marketing or dynamic pricing. That fragmentation, that was the golden opportunity.
So the traditional path to growth, the one mastered by Public Storage, is what we call the asset-heavy model. It's pretty simple, really. If you want to make more money, you've got to buy more buildings. But, and this is a big but, this takes an enormous amount of cash, which means growth can be really slow and really expensive.
And this, right here, brings us to Extra Space's absolutely brilliant countermove. They decided not to even try to outbuy the competition, no. Instead, they created a system. You can really think of it as the McDonald's of self-storage. Their strategy has these 4 simple pillars, and it works a lot like a franchise playbook. You know how McDonald's standardizes exactly how you make a Big Mac, no matter where you are? Well, Extra Space did the same thing for running a storage facility. They created this super high-quality management system that they could just plug into any location.
Now, the real power of their model comes from centralizing all the hard stuff. So instead of some local manager trying to figure out Google Ads on their own, Extra Space runs this incredibly sophisticated digital marketing operation from one central hub. They do the exact same thing for pricing, for customer service, creating this huge operational advantage that those small owners just can't compete with.
So this gets us to the core difference in their philosophy. Public Storage, they invested in physical things, concrete and steel. But Extra Space, they invested in the intangible stuff, in systems, brand reputation, and technology.
And that's the big question, isn't it? It really challenges the way we've always thought about real estate investing. So, let's put these two models head to head and see what we find.
This table really breaks it all down. Let's start with capital. The asset-heavy model needs a ton of it, which means growth is slower, and the company is carrying way more risk. On the flip side, the asset-light model requires very little capital, so you can grow way faster with much less risk. And now look at the revenue source. Instead of just getting rent, Extra Space gets these high-margin management fees. That's a much more scalable way to make money.
What Extra Space basically figured out is that you don't actually need to own the physical property to control the business. If you can own the brand, the marketing, the pricing, and the customer experience, you control everything that really matters.
Okay, so that's the theory. It all sounds great on paper, but does this asset-light strategy actually deliver better results in the real world? Let's take a look at the numbers.
The benefits of this model are just huge. As you can see, it leads to faster, more scalable growth and cuts down financial risk. But 2 points here are especially powerful. First, it generates a higher return on invested capital. We'll see that in a sec. And second, it creates this built-in pipeline of future acquisitions. It's the ultimate try before you buy. They get to run the property, see all the numbers, and then decide if they want to purchase it later. Genius.
And here's the ultimate proof. This chart shows return on invested capital, or ROIC. That's just a fancy way of measuring how efficiently a company uses its money to make a profit. Basically, how much bang you get for your buck. And well, the chart pretty much speaks for itself, doesn't it? Extra Space's model consistently delivers better returns.
And all of this creates this incredibly powerful flywheel effect. The more properties they manage, the more data they get. That data makes their pricing and their marketing systems even smarter,
which delivers better results for property owners, which, you guessed it, attracts even more owners to their platform. It's a cycle that just keeps getting stronger and stronger.
Of course, no strategy is perfect, and this industry is definitely not standing still. So what does the road ahead actually look like for this management-first model?
Yeah, the model isn't bulletproof. Their success really depends on keeping all those third-party owners happy. There's also the risk that if a property they manage performs poorly, it could hurt the Extra Space brand. And of course, when you've got a winning idea, you can bet competitors are going to start trying to copy your playbook.
Looking ahead, this industry is just going to consolidate more and more, and technology is going to become even more critical. I'm talking AI that sets prices in real time and fully smart contactless facilities. This trend actually plays perfectly into Extra Space's hands, since their whole model is built around using technology and scale.
And that brings us right back to where we started, to that central idea. Extra Space Storage has really given us a masterclass in business strategy, proving that in today's world, controlling the system can be way more valuable than just owning the assets.
But, this story isn't really just about storage units. This whole asset-light, management-first model could totally revolutionize any industry that's fragmented and full of independent owners. Think about laundromats, car washes, maybe even local moving companies. It really leaves you with a big question. What's going to be the next McDonald's of everything?